Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
Good morning, ladies and gentlemen. Welcome back to a very special Good Friday episode of the AJ Brown Show. Today is April 18th. This is episode 180. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. Good morning, AJ.
Hey, Cyprian, I'm doing well. Good morning to you.
When I was listening to the intro, I was like, "Oh, AJ's, helping investors around the world make money, but today's got the day off." But not really. You're always looking at the markets. You always got your eye out there. Did you get your Truth Social notifications set up to make sure that we've got our exocastic noise, in tuned in?
I have my X one set up. I don't have an account on Truth Social. Should I get one?
I don't know. I feel like it is his company, and if he's going to post something important, he's probably going to put it on Truth, but it does hit X pretty soon after. I just don't know how much of an impact that was, like 5 or 10 seconds might matter. 1 minute, I don't know.
I mean, making sense of it all, that's what we're trying to do.
So, looking at the market, we did continue our sell-off a little bit, but let's go ahead and pull up the S&P. We are kind of in this wait and hold, right? We had the big reaction to the tariffs. We had a little bit of move up, and now we're kind of consolidating a bit. What are your thoughts?
Earnings season. That's my thoughts. We started this week with banks and a couple of key companies reporting earnings. We're going to have earnings the rest of, the next 3 weeks or so. A lot of the earnings are going to be rolling in. It's interesting because we had some earnings and earnings season this time around, you know, they're reporting their earnings, and just about every company's doing well. That's looking in the past, and then they have to give forward guidance. Now, some companies are copping out and saying, "Hey, I can't give forward guidance." Some other companies are doing a really unusual thing that I haven't seen much, which is where they're giving a plan A, plan B. They're giving two sets of guidance. And it's really a difficult job right now, like we just got through saying, because they need to get accounts on Truth Social as well. And so earnings season's really, causing us to look at things. And, should we talk about what happened when Jerome Powell spoke?
Yeah, but just to follow up on that, upcoming this week, Tesla, Alphabet, Boeing, IBM, Intel, which are kind of involved in this manufacturing angle that in the tariffs, and so maybe the feedback or the guidance, right? Guidance
Yeah.
A or guidance B is going
Just
to make an impact, right?
just the earnings call alone will be very educational about what's happening. Yeah.
And so on the Powell front, is that basically is the storyline Trump wants to fire him because he's not lowering rates and he's
Well,
pushing back a little bit?
you know what the scoop is the market so the market sold off on that day, and I would argue, coming from a Wall Street reporter, Wall Street, investor, I would say that the selling off on that day had nothing to do with Powell. It had to do with the earnings guidance. And I know I'm taking an extreme point because, you know, the media is totally, as much as our current U.S. president likes to say that the media is against him, the guy knows how to manipulate, whether it's Fox News, whether it's Newsmax, or whether it's X and Truth Social. He knows how to get his message out there, and he knows how to craft it perfectly. And so he kind of changed the attention to this Jerome Powell subject rather than to the forward guidance companies are giving. But what I saw in intraday trading on Wednesday, SIP, was not anything having to do with Truth Social. it had, I mean, Jerome Powell, yeah. It had nothing to do with what he said because I think Wall Street has totally digested what he said and was like, yeah, that's nothing new. It was more of, hey, companies can't figure out, head nor tail, and they don't know what to do, and so the investors are are pulling out. Now Trump changed the dynamic, and he's like, well, Jerome Powell said he's not going to lower interest rates right away. I should fire him, and that's not actually possible, but I'm sure there could be a lot of pressure put on him. But his stance doesn't go through till January 2026. And if Trump really wants to screw up the equities markets and even the bonds market, he should fire Jerome Powell because investors like him. He's way better than the Ben Bernanke. He's way better than Janet Yellen. The guy knows what he's doing. Yes, he was slow for the COVID thing, but I think that he's in difficult waters right now because inflation is possibly going up, but at the same time, so's uncertainty. And so, with all of that said, do you raise rates or do you lower rates? That's going to be very difficult for the Fed to do.
Well, maybe we could look at the expectations on that.
Absolutely.
But it's one of those things where you're right. It seems as if the market likes what Powell has been doing. And I mean, between you and I, the soft landing, we've been coming on the show week after week, and we were like, well, it's working. It's working, right? The tapering is helping. But this is one of those, I saw one of the commentators this week basically said it's like our own self-inflicted wound, right? Like our own elected officials are causing the chaos, and their rationale is, well, we need to do something about this, and it's going to be very extreme, and so the Fed has to operate within that chaos world. And when asked about it, have to deflect, right? It seems as if the Powell hasn't given an answer on the tariff stuff, like the past 4 or 5 weeks.
Words, really. I mean, he kind of did, but the scoop is that's a difficult one for him, for all of them, all the Fed presidents and all the Federal Open Market Committee.
So the consensus is we're gonna hold here for the next couple of weeks.
For May, it looks like, and let me change my color here. I got my magic marker today, Sip. We're gonna hold. This is where it's currently at. That's what the expectation is. That's kind of what Jerome Powell's been guiding. And now, it was a question of June or July, but it looks like investors strongly believe that as early as June, we're going to get a quarter-point rate drop. Then in July, you take a look at July, and it's kind of in between, but some investors are saying he may do another quarter-point rate drop. That's it's not even over a majority there, but another quarter-point rate drop. Then maybe September we hold, although some people are saying he does another one. By October, he's done another one. By December, they're saying he's probably gotten a whole point down. So, 4 basis point drops, that's what people are expecting over the rest of the year. And probably a quarter point at a time. I don't think we're going to see any half-point rate drops.
And what would be the kicker here to continue the lowering of the rates? Because it's my understanding that the mandate is inflation and employment. And it seems as if employment, although we haven't had any of the hard data come out, is going to start to take a toll here. Would that be a precursor, right? Because sometimes the market likes to get ahead, right? Like if we pull back another 5-6%, everybody's like running for the hills, but the Fed cannot necessarily react to that, or can they? Or is their hand going to be pushed?
Growth versus inflation, right? That's kind of the conflicting mandate. And we were at a point where we were almost at full employment, and then we were controlling inflation at the same time. But a lot of the fiscal policies being chosen by our current administration here are making the job that the Fed has difficult. So I could see why they're pausing to see how much of this is transitory. In other words, if you read between the lines, what Jerome said was, the tariffs came on like overnight, and he's like, I fully am going to watch to see if they come off overnight. If we already hear that there's talks with Mexico, we hear that there's talks with the EU, we hear that there's talks with China. So if they come on and come off as quickly as they did, then Jerome's not going to have to do anything, right? So that's kind of where he's at. He's like, I got to see what's long term, because when the Fed pulls levers, well, if you think about it, should the administration. They should be really thought out and pulled only when everybody's sure that that's the direction we want to go. So that's the way he's taking it. It's kind of contradictory to what Trump does. Trump changes a lever overnight and then changes it back the next day. So we'll see how that plays out.
It is a good point, though, that the ramifications of the tariffs may not even sip through into the economy, just because it's mostly rhetoric, and it seems as if a lot of the reciprocal countries are coming to the table, which I think is the end goal. We just got to kind of deal in this gray space for a while.
We don't, that's the other thing that people have been having some issues with, which is, what is the end goal? Is it, to generate revenue, which is one thing that was said? Is it in order to kind of repatriate, bring back, manufacturing? Is that another goal? Or is it in order to kind of retaliate? Is it, reciprocal or retaliation? But what we have right now is basically a trade embargo with China, and that's going to affect every person. People don't even realize how much of their stuff or parts of their stuff is manufactured in China. But I think May 1st, we're going to find out, especially in automobiles, we're going to find out, what happens, because all the auto companies have pledged through April to, not touch prices. But come May 1st, I think we're going to see prices jump across the board, not just in automobiles, but definitely automobiles, but everything.
Did you see any of the I guess, I mean, if we want to discuss the chart here, I did have something on China that was trending this week that we love to get your feedback on.
Let's just talk one more thing about the Fed. So the other thing that you and I talk about is quantitative tightening. And a couple weeks ago, Jerome said he was going to slow down, and I had been watching, and there was no sign of a slowdown till just last week, right? But we also saw some slowdowns. We kind of see it's kind of cyclical, and so I almost feel like, well, I'm going to keep watching this, but quantitative tightening has a direct effect on the bond market, especially the part of the bond market that controls mortgage rates. So I'm watching this carefully. We were up at the Fed having something like $9 trillion worth of IOUs to the U.S. Treasury. They're down to 6.75. They said they wanted to, or 6.725. They said they wanted to get down to 5, so they were on track to do that. He did say that they were going to pause, but I didn't see any immediate pause. We'll see what happens, but this also, I always remind our viewers that this also has a direct effect on how the macro economy works.
I mean, looking at this chart, it seems as if we're well on our way to achieving that goal. That's a great sign to see. Us addressing that, and even that little pause seems like a blimp when you kind of scroll out, like the last 2 years or so.
Yep. And now I have been hearing rumblings, and so we're gonna have to see what plays out during May. I've been hearing rumblings about some banks getting weak. And remember when a couple of those banks failed right when quantitative tightening started, and that's why we have this little blip here. Let's see what happens. I don't mean to foreshadow anything, but let's see what happens in the next month or two, May and June.
Well, that one blimp I think is like the Silicon Valley incident, and
Yeah.
I never even heard of that bank before it became a catastrophe, to be honest.
Mid-sized banks, that's the ones you got to, mid-sized and small banks are what you got to worry
Were
about.
there any other economic pieces this week that caught your attention? I saw some retail sales,
Yeah,
some
yeah.
industrial production.
Industrial production, I mean, industrial production is flat, if not a little bit down. But, I pay a lot of attention to retail sales, and we saw a pretty big uptick. I don't know if you can, so 1.4%. It is what was expected, right? But compared to last month, which was February, this is a big jump in the increase of amount of sales. And I almost feel like this is fueled by the whole tariff discussion. So people who were, thinking of budgeting out their purchases over the whole of 2025, I think that they're saying, well, I'm going to go ahead and lock in my purchases right away before tariffs affect me. So you're seeing computers go off the shelf. You're seeing people doing you're seeing businesses doing a lot of purchasing. And I think that's what we saw here. We even saw a pretty big uptick. This is, I mean, in part, I think people are also buying cars that they were going to buy later in the year. You're also seeing a pretty big uptick, kind of similar to what it was last month, of, just other stuff besides cars and gas, right? This 1.4% includes cars and gasoline. This 0.5% includes, no cars, and this 0.8% includes no cars and no gasoline. So just the retail sales, it's showing that people are doing their purchases early, which means what's going to happen in the rest of the year? We're going to see a huge slump instead of a kind of a constant purchase thing.
So that's last week. This heading into this week, it looks a little light, but we've got some home sale numbers. It looks like a Richmond Fed manufacturing index, which I never really thought would be important, but I guess we really are looking more into what the ramifications of the manufacturing sector are. And then consumer sentiment. There's days where consumer sentiment has no bearing, and there's days where it can really move the market. So, anything sticking out for you next week?
No, really a boring week when it comes to economic news, but man, my eyes are going to be watching the earnings. Earnings is going to be a big deal next week.
Yeah, and we did mention some of those names. Tesla. I mean, I could imagine the Tesla call being very interesting with Elon on there, giving some insights. And then it looks as if gold's continuing to hit all-time highs. Oil is pretty low.
Oil is low. Oil is up though, so oil was trading for a month or so at $60. I don't think people understand that when oil gets that low to $60 a barrel, it means that a couple of wells get turned off right here in the States. It's not profitable for them to pump oil here in the States if the price of oil is below $60. So some of those more difficult, labor-intensive wells to pump from get just turned off. So it's back up to 65. The ideal place is 70. That keeps the U.S. pumping as much as it does. It's interesting because, people want to drill, baby, drill, but at the same time, they want low oil prices at the pump. And it doesn't make business sense for oil companies to drill for U.S. wells if the price is down at $60 a barrel. It just doesn't make sense for them to do that. So, it's crazy how what you hear you get excited about in the different rallies and stuff, and then what really makes dollars and cents.
Yeah, I actually learned that watching Landman with Billy Bob Thornton. He makes it very clear that at $60 a barrel, there's no point of even doing any of this stuff of rolling around and putting tubes into the ground and whatnot.
Nah.
Okay, so
what's going on with China? You said you had some sort of.
Well, I got two things coming from. So, like, it seems as if the actions from the administration are trying to get China to budge on some fair trade, right? That it seems as if we're trying to bully them, but they're not budging. And so one of the big things that happened in China this week was that they removed some of their like secrecy laws where basically, you know, what ended up happening, and I guess I'll just pull it up here, is all these influences started to come up with basically basically unveiling how products are actually created. So like this guy, this guy's made like 10, 20 videos that have gone viral where he shows you what a Birkin, I mean, one of these Louis Vuitton, basically a Hermes, right? A Hermes bag, a $30,000 bag. He goes through all the parts. He's like, well, we get the leather from Italy, and we get the thread. It's the highest quality thread, and we get the labor, da 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 da. And he's like, final cost $1,500, ticket price 30,000. And I mean, there's been like 5, 10, 20 different brands that have been called out, whether it's Lululemon, the handbags. And so there's this big discussion now of like US companies don't still actually manufacture the majority of their stuff in China and then ship it to a warehouse and put the logo on. And so consumers are becoming aware of this. And so it may have some sort of effect on the luxury market. What are your thoughts on this, like, unveiling? Like, I think some of us knew, but like they're really showing the details now, especially on TikTok now, which is the China angle.
Yeah, absolutely. So I've seen quite a few of those videos, and I've also noticed that some of those outsourced third-party manufacturers are then, opening up TikTok shops and actually selling the extras, right? So they're violating their non-disclosure agreements, like you said, the secrecy agreements about what they're doing. So of course there's a little bit of doubt, but I've also noticed an uptick in those sales and an uptick. You watch one of those videos and so many people are watching it. There's still so many people on TikTok that, this is a major, value pricing is something, but if there is, it's going to be interesting to see how this all plays out.
And then it's funny because they do like some of the memes have been like bigger American shop workers like sweating. They're almost like making fun of American labor, where it's like, oh, you guys could never pull it off like we do it. And I've seen a couple.
I was looking at a report. Speaking of manufacturing, which is kind of what you're hinting at. Most in the 1960s, 1950s, there was about 28% of the American population involved in manufacturing. And right now it's down at 9%. And if you look at Europe, you think of some of the other big manufacturers that you think of as countries. You think of like Germany, you think of Japan, that they are manufactured. They're actually also down in the single digits of the percent of their population that manufactures. Now, I'm all for repatriating manufacturing, bringing it back to the States, bringing it back actually to those other countries, Germany and Japan. But you better believe that there's going to be a lot of robotics, a lot of AI, a lot of productivity. Yes, we'll bring manufacturing back, but if you're correlating bringing manufacturing back and bringing back jobs that don't require a college education, I hate to be that person to tell you that you're smoking the crack pipe, because the scoop is we're not going to. You're going to get some jobs, but they're going to be highly technical. They're going to require, and you're going to be maintaining the AI and maintaining the robots. The manufacturing is not going to be bringing back high school jobs. So you might as well get over that thought right now.
Yeah, manufacturing just in general past the year 2025, 2030, 2040, 2050, it's like it's never going to look the same, right? Humans aren't going to be the hands doing it. It's going to be some sort of collaboration. And hey, now's the time to get in on learning these nuances.
Yes.
The other China stat that I saw was they're buying a ton of gold, right?
Yeah.
A lot of their money is being pulled out of maybe U.S. Treasuries, maybe some bonds, but a lot is going into gold versus some of the cryptos, which was one of the counter arguments here is like it's not really pushing Bitcoin. They're going into these traditional gold. Any ideas there? Just safe
In
haven?
fact, yeah, absolutely. In fact, they're also using it as kind of a cudgel, right? Because China and Japan, China has already, China at one point surpassed Japan as the biggest holder of U.S. debt, but then they made a decision about 10 years ago to kind of pair their holding in U.S. debt. So Japan is the biggest. Japan really hasn't touched their U.S. debt, but China is using it as one of the pawns discussing this trade embargo. They actually pledged to get rid of 100 billion of their U.S. debt like overnight, and that's gonna again affect the whole bond market, and that's going to affect people's mortgage rates, and it could possibly have a negative effect. I mean, that's kind of, people forget that, the investment dollars that come into the U.S. to get these small, medium, and large businesses running, to get the U.S. moving, come from foreign investors. So even though a lot of folks look at, and don't get me wrong, I'm all for fair trade. So I'm all for, having similar reciprocal tariffs. But you got to realize that, when when we buy stuff from other folks, they don't just take that money and bury it in the backyard. They then reinvest in our economy. So we're the current administration is busily unwinding all of that, which is going to cause some short to medium term upset. There's no getting around it.
Well, the good thing for our community, our members, and those that follow us is we have strategies for all sorts of markets that go up, markets that go down, markets that go sideways, allowing the time to pass and generating income off of that. And so if you're new watching for the first time, welcome. Thank you for joining us. AJ's quick links are in the chat. This is our little page that's got all of AJ's goodies. In the rest of the show, you'll see some of the indicators that he's using. You can find that in our free indicator suite. We've got links to all the socials. If you're watching on YouTube, we've been crushing it on YouTube lately. AJ's cranking out these shorts, and he's got a stylist, so you might see him wearing different outfits, the trendiest stuff around, but really good stuff there. So head on over to the YouTube, hit that subscribe button. Instagram, Facebook, follow. Also, we've got a daily workshop, so you'll hear us discussing some of these premium selling strategies. This is a great resource for learning how to navigate some of those strategies. And then we've got custom coaching and the general trading trainer program, all for you in one easy to navigate link. It's in the chat. Head on over there, show some love. We've got another half of the show ahead of us. We are streaming live, and so all you wonderful people that have the day off that are tuning in, if you have a name that you want AJ to run through, or a concept or question, feel free to throw it in the chat. Otherwise, we've got AJ's pick of the week. Maybe talk a little bit about swing trading. I guess with earnings season, there may be some possibilities there. And then we've got our speed round. So you guys sit tight. We're going to take a short break. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Looks like we're gonna pull up this S&P to get the ball rolling, or it looks like the VIX because
I'm on the VIX.
that's been a popular trade. And are you setting up for another swing at it?
Yeah, are we showing my chart, or maybe my screen's not updating?
We've got the VIX up there.
Oh, okay. Fine. That's awesome. Yeah. I just wanted to point out that the VIX is calming down, but we're still, so I've got this line at $26 that you see right here. That's my unfounded fear threshold, $26, right? And so we are still above that, but we're not up at like 60, 50, 40. We're down here at $29, almost $30. So we're slowly coming down into the calm area again. So, that's what usually happens unless something, crazy happens in the market again. But now let's take a look at the S&P, because I want to point this out, because this is going to, we talk a lot about the bull climbing up the stairs and the bear jumping out the window. So if you take a look at my indicator here, and you can see the analog version of it down here. This is just my hacked MACD showing the analog version. These little crossings align with my arrows here. When we connect the dots and kind of look at it, it shows us a different picture. Here we go. So we've been in this downtrend since February 3rd, right? And every time we have one of these moves down, we actually move down so much so that, it's not just considered sideways channeling. This is definitely considered a downtrend. And then when we retrace or have these contraction phases, we are contracting to the right level. In fact, if I throw my levels in here so you can see what's going on, here's my rulers. We'll zoom in a little bit. All right. So yeah, you can see every time I go down, I get into this green zone, and every time I go up, I get into this magenta zone, green, magenta. So here we are. In fact, this one, because of the tariffs on, tariffs off, not this week, but last week, it actually only lasted a day from reversal to reversal. We had our bottom reversal, and the next day we had our top reversal, and now we're coming back down. This down move is going to tell us, and this is how we're going to have the fastest understanding of, have the bears hit the ground, right? So we want to figure out and find where this next bottom reversal happens. And my levels are right here. These are critical levels. And everybody who's watching us, whether it's on live or on a replay, you got to pay attention to this 49.8277. You can just round it to 49.80. I mean, of course, you'll want to look at the 5,000 level, because the 5,000, everybody likes round numbers, but my calculations have it at 49.80, and then 48.70, right? 48.7088 is the exact number being calculated. If I don't get my next reversal down below 49.80, 5,000, then it could be that the bear is hitting the floor, right? So going below 49.80, we're still going to keep plummeting. So I'm watching SIP very carefully, 49.80 and even more 48.70. If I have my next bottom reversal below those lines, well, then I'm going to continue thinking that, hey, the market is going down. But if I stop there, if I have my next reversal above 5,000, above 49.80, above 48.70, then I'm going to start thinking about the sideways channeling again. I'm going to start thinking about all that good stuff. So I just wanted to give everybody those levels. Those are the levels calculated by our retracement analysis. Those would mean that we're at the end of this downtrend that started back in February.
And year to date, the S&P is down 10.2%. So when you look at it over 2 or 3 years, that's not I mean, it's probably more on the healthy side if you kind of look, all through a longer lens, right?
Absolutely. So, this kind of pullback isn't, I'm looking at 2 years here on the chart. And when I look at 2 years on the chart, this pullback brings us back about halfway, right? 1 year ago. So, the gains over the last year have been erased. But, if we go back even further to say 10 years, you're barely making a dent in the last 10 years of movement. So
And so even if we were in this sideways chop, through the rest of the year, right? Even if maybe we don't even get back up above, 5,500 or below 5,000,
not the end of the world. It's like a
not the end of the
recalibration.
world. And it's probably a good time to start looking at some alternative ways to generate income from that, right? Like if we stay in that range for the rest of the year, your premium strategies
It's
are
gonna kick
perfect.
butt. Gonna kick butt. Okay. I wanted to get that broad market out there for everybody so that we can now we should talk about some swing trading. You want to get into Avago?
Yeah, let's do that. And the precursor to the swing trading is when we are light on the economic news and we've got all these earnings. Are you looking at volatility rush and crush because that's something that we've done in the past in this season? Or would you be avoiding that, given the environment is a little bit different?
The latter. So the volatility rush and crush is such a good moneymaker. But here's and I'm going to be completely clear to you guys who love to trade options. The options price is influenced by so many different variables, right? We've got the underlying symbol price. We've got volatility up, volatility down. Specifically, implied volatility is what influences the price, or maybe it's the other way around. And last but not least, it's how much time is left to expiration. There's maybe some other things like what the Fed's doing with the interest rate, but that's where we kind of think people, adjust their buying and selling decisions. But the number one influence on option price is the underlying symbol price. That's why it's called a derivative. And because of all the uncertainty, especially around earnings and this whole discussion we had earlier on what's guidance going to be, I'm not feeling good this season with trying to do our earnings plays. So our earnings plays try to isolate those symbols that are only focused on volatility rush and crush and not underlying symbol movement. I don't think you can cancel out symbol movement from any symbol this time. So I'm a little bit, unless I'm doing straddles and strangles, which aren't my favorite strategy, I'm kind of shying away from earnings this season, earnings plays.
But you see an opportunity in your pick of the week this week, which is Broadcom, which has a weird ticker symbol, AVGO, for the name Broadcom.
So that's right. That's because they've had many mergers and acquisitions, and one of the companies was Avago. And so Avago, Broadcom, took over their ticker symbol. All well and good. I wanted to outline a trade that I actually did and one that's setting up. So this is not a earnings play. In fact, Avago is not really on the usual earnings calendar. If you take a look here, they reported earnings back in March 6th. No, this is a swing trade. So we have been in a downtrend, right? And so to kind of explain swing trades, because I know a lot of our viewers are premium seller trades, imagine that you've got like a board and you pull the rubber band in one direction or the other from that board. And if you pull that rubber band enough, it's going to cause a snapback. Now, if you pull it too much, it breaks. And if you don't pull it enough, the snapback's going to be kind of like ho-hum, right? So when we're setting up a swing trade, first of all, we evaluate how thick the board is. And also, is the board pointing up or down? If it's down, we actually want to pull the rubber band up. If it's up, So I'm talking about trend. So we evaluate heavily the trend. You can see on Broadcom here, I've used my retracement analysis and my linear regression line to really just validate that the trend is there. Then the next thing I do is I actually measure using a leading indicator how much that rubber band is being pulled. In this case, I used the Williams percent R. So the Williams percent R, let's just, I can actually throw this on here very quickly. Load set. I call it my reactive template. There it is. The Williams percent R is a good way to measure how well that rubber band is being pulled. Now you can see here when I got in this last time, that rubber band was getting pulled really, really well. You see how it's above this yellow line? That means that that rubber band was pulled, pretty strongly in the up direction. Once you've got that rubber band pulled, SIP, I just look for a good signal down. And for me, that's a close below the 7-day with next day follow through. And I got that on February 20th. And so I bought to open some Avago July 230 puts. I was spending $25.40. So it was kind of an expensive trade. It was $2,540 per contract for those options. But then I just waited. And I waited actually for a certain amount of profit. And if I got my technical stop before then, I would have exited. I got a hint at the technical stop, but it never got follow through. And then once I had a certain amount of profit, I went ahead and sold my Avago. Let me show you a price because I see that it's off the screen. I'm going to zoom in here too so you can really see what's going on. Or maybe I just need to do this. That's what I need to do. Let me pull this over here so you can see what price I sold it at. I sold these puts at $62.30. I bought them for $25.40. I sold them at $62.30. Talk about an awesome trade. I had that on from February 20th until April 8th. I got my trailing stop signal. So for me, when a swing trade has doubled in value, so when I was around $50.80, I went from using a technical stop to using a trailing stop, and my trailing stop got me out at $62.30. So yeah, the cool thing about this whole swing trade is that it's setting up again. You'll notice here, again, looking at, I still have my strong downtrend. That piece of wood is nice and firm. I've moved up and the rubber band got pulled. Do you see that Williams percent R above the yellow line?
Mm-hmm.
And just yesterday at the end of the close, we got our confirmation that we should perhaps think about doing another one of these trades. Now, I need to see follow through. I need to make sure that when on the day of trading, I see prices trading below, this Thursday close. I need to make sure they're trading below the day's open range. I have, those criteria that I use with my program participants to describe follow through. So I'm not going to be trading unless I see the follow through to yesterday's signal. But when I get follow through, I'm seriously thinking about buying more of these puts. The puts I'm thinking about, I could also just short Avago, right? If I wanted to just short the stock. But I'm actually thinking of buying some Avago September 180 puts. These are the ones that are going to expire on the third Friday of September. When I do these swing trades, I always go about 6 months out with the options and expiration, and I go about 2 or 3 notches in the money with the strike price. And then it's basically a leveraged stock replacement strategy. So I just wanted to share that with everybody because swing trading is where it's at. But you want to make sure earnings is not in the way. You also and so Broadcom is a perfect. Their earnings was last month. Earnings is not going to be in the way. We also want to pay attention to that broad market bottom that I talked about when I looked at the broad market. Because if the bottom is found, you're going to see that ricochet through all these candidates, and that would be a signal. If I got into the trade, say Monday or Tuesday next week, if I saw that a bottom was being found in the broad market, I might consider exiting this trade early.
And it being Friday and our previous Fridays not being so positive and really tanking, the fact that the market is closed on a Friday might actually be a good thing, and that it's a holiday. So maybe we'll not have as much weekend drama with the back and forth. And I mean, maybe that could have some sort of psychological precursor to finding that bottom next week. But I agree with your assessment here. If we do fall, this is going to be one of those names that just goes right along with everybody. But it is more on the expensive side with trading at about what 177 ish right now.
Yeah, so the underlying symbol's expensive, and you want to evaluate your risk in this, but man, if you do one of these swing trades right, and you do, up to the amount that you can in your portfolio, these are the trades. A lot of people ask me, hey, what kind of trades did you do when you were first starting out in the dot-com bust in order to grow your $5,000? I did everything, but a lot of these swing trades that I'm describing right here are the ones that really, they double in price. They double in price in like 2 or 3 weeks. So these are the ones that, if you can find a good candidate and, the broad market is supporting you, everything, all the planets are aligned, this is a good way to really boost your portfolio.
All right, that's what AJ likes this week. Broadcom, ticker symbol AVGO. All right, AJ, we've got 3 other names from our lovely viewers all around the world, it looks like, this week. Let's start with this first name. Graham in London, England, wants to know your take on Mosaic, ticker symbol MOS. I always forget what this company does.
Fertilizer.
Boring.
This
but
company, boring, but just what we like. Mosaic is a miner of potash, which is, when you look at your fertilizers and you look at the different numbers, potash is a really good, I believe. And trust me, I'm not the biggest green thumb out there, but I think potash is one of the ingredients that helps phosphorus and stuff like that in your, maybe nitrogen. I don't know. Those numbers that gardeners know and I don't know. With that said, we got to figure out what's going on with Canada, because Mosaic, obviously, a lot of our fertilizer for here in the States comes from Canada, and that has not been spared from the tariffs, I don't believe. Let me go ahead and switch back to my view of swing trading, not swing trading, but premium selling trading. Let me go ahead and turn off this, and I'm going to put on my fast MACD. That's a good reference to use in swing trading. I mean, yes. In fact, we featured Mosaic about 4 or 5 weeks ago in our Thursday workshop calls. We actually featured it up here, and we were telling folks to short it, and I know a lot of my program participants did short it and then did sell put premium and basically got into that cycle of turning these into income generators. I think Mosaic is a fantastic symbol to doing that. You'll want to pay attention, of course, to any headlines that could affect this. But yeah, we're coming up. I think, Graham, I think you're seeing what I'm seeing. We're coming up towards that 2850. If we get another magenta arrow on the fast MACD with follow through, this would be a great opportunity for us to either short, or I bet you, and I'm going to pull up our options lookup tool. I'm going to type in Mosaic, and I'm going to look for possibly a substitute put option, or options lookup tool that anybody can get for free just by going to that quick links page, I believe, and getting free access to our web portal. Let me just look at possible substitute options. So what I do is I look at this number right here, and I look for one that's under 5%, and I also look to make sure that the bid-ask spread, this is $10.55 for the bid, $10.75 for the ask. That's totally reasonable. I like this. I like this. I like the 40. So if you're looking for a substitute to shorting the stock, I would buy these put options. I'd either buy this Mosaic, doesn't expire until next January, 37.50 put, or even the $40 put. Grab these put options and you'll get the same sort of price action. The put option will go up in price just like a shorted position gains in value when the underlying stock goes down. So wait for the signal, buy either the put option or short the symbol. And then if it comes back down to 24 and does what it did before and reverses on you, sell your put premium, buy your protective call, and you're going to have an income generator. And it looks like Mosaic's been generating income for us reliably. Let me go back a year. Yeah, reliably for, gosh, it's just a good symbol to sell premium on. So I see your symbol, your position going up. Definitely wait for the signal and then, do what you got to do.
All right, Mosaic, ticker symbol MOS. Moving on to our second name, Behemoth. Laura out of Atlanta, Georgia wants to know, is there something in AT&T?
All right. So, AT&T was going up, but now it's in a new pattern. And I like that pattern for selling premium. Now, Laura, I think so. I have not sold. I have done the earnings plays on AT&T in the past, and I see that earnings is coming up on April 23rd, and I'm going to stick with this is before the market open. So if you're going to do an earnings play, you do something on April 22nd and then something again on April 23rd. But I'm worried, and I kind of said that to Sip earlier. I'm worried about whether or not price action due to price action due to the uncertainty is going to trump, it's going to be more important than the volatility rush and crush. So if you're thinking of the earnings play, I would be careful. If you feel super confident, go for it, but just make sure you size it correctly because I'm worried about earnings plays. But man, this has been somewhat reliable for selling premium. We're heading up. If we get up near this $28.50, $29 level, and we're past earnings, get that behind us, assuming nothing crazy happens, I might consider, again, shorting AT&T, whether you short the stock or you buy the substitute put options. I would do that. And then when it gets back down here at the $25.50, $26 zone, sell your put premium, buy your protective call, and start making income on AT&T. This is the perfect pattern to do that.
All right, we'll keep an eye on that. Thank you, Laura. Very interested in this last and final name, just because it seems as if the airline industry has been kind of all over the place. But Cindy out of Phoenix, Arizona wants to know, do we have an opportunity in Southwest Airlines, ticker symbol LUV?
Well, I think I know why you're featuring this because I have talked about the Southwest Airlines, and I've even featured on our show how I've done earnings plays. Southwest is not really demonstrating a pattern I want to sell premium against. It's not even demonstrating a pattern that I want to swing trade or do anything like that against. So I see what you see. I see the earnings coming up on April 24th. Before market open. That means you'll want to do something April 23rd, April 24th with your earnings trade. And I have done earnings plays on Southwest before, and they were quite profitable. I guess your question is am I going to do it again? I think I've made it clear. I'm staying clear of these earnings discussion plays this season. I know I might be leaving money on the table, but there's just that much uncertainty. If you wanted to trade this with a straddle or strangle, I could see you trying to do that. But doing one of our calendar spreads, I'd be so careful. And if you do try it, let's size our position accordingly so that if it does become, a loser, we don't wipe ourselves out. Okay.
I know that I keep hearing some different policy changes across the different airlines with whether you can bring a bag or not. it looks like the Southwest one this recently was after 53 years. Southwest is transitioning from an open seat policy to assigned seating. Look out, folks.
Yeah, that's happening. And also, man, I feel like people are afraid to fly based on and I don't know if the media is just picking up on a lot of the accidents that are happening, or if there's just more accidents happening. But man, you're hearing about planes that all of a sudden have to turn around. You're hearing about near misses. You're hearing about real crashes. So I wonder if that sentiment, of course, it's less than the number of crashes that happen on the highway, but when a plane crashes, you're all but, done. So I think people are worried about traveling, and that might affect just consumer sentiment around traveling on planes.
Even that helicopter. Did you see the helicopter fly?
New
The
York City, man,
Siemens Spanish president or something like that.
totally
Um,
flew apart.
Fortunately, the weather should be improving across the country, so we're not going to be dealing with any of those ice situations
Yeah.
that I believe we've seen. And I mean ice as in the weather ice, not as in the department ice, although I can imagine that preventing some people from traveling as well, that may have done so more freely in the past.
TSA is the perfect place for you to get nabbed up.
And I have seen some stories of people being accidentally, picked up and then released a while back. All right. So AJ, Good Friday. The markets are closed. It seems as if the weekend should be a little bit more chill. Everyone's going to be maybe doing holiday stuff. The administration will be doing some church appearances. Heading into next week, we're looking at earnings. Anything else on your radar?
No, mainly just earnings. Again, going to be watching the SPX and the individual sectors, especially any sectors where I have trades in play. So if I've got a stock or an ETF that is, got a related sector, I'm going to be watching to see. I'm so curious about bottoms. So I want to know, what's going to happen next. Are we at the bottom here around 5,000? Or are we going to continue down trading? Should I continue polishing off my swing trading strategies? I've done about 3 or 4 swing trades in the last month or so. Should I keep doing that, or is it time to really embrace the premium selling again? Those are the questions in my mind. And then, yeah, I'm going to be watching the earnings season, but this time, instead of trying to trade them as much as I have in the past, I'm just trying to get an idea through companies' forward forecasting what they think is going on in the markets.
Yeah, so we're definitely going to be we're going to be seeing some interesting commentary coming from the different executives this week. And if you out there in the inner sphere wants to follow along, wants to get some more in-depth answers to some of these high-level questions, then come join us in the Trading Trainer community. I've got AJ's quick links in the chat. Once again, pulled it up here. Show some love. Hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. And yeah, we'll be watching markets this week, looking for any winners, any potential, other opportunities, and then reporting back next week. So appreciate everybody tuning in, and truly do hope that you guys have a good, relaxing weekend, and maybe we can get some more calm in the market next week. So a little bit more normality, because these 10% swings are weighing on me.
They're weighing on me too.
All right, guys, appreciate your time. AJ, thank you again for your time this morning.
It was a good catch-up. It's a good catch-up. We've had so many guests. It was good to take a moment and just do some deep dives today, so that's good.
That's right. That's right. Well, appreciate it. Appreciate everybody tuning in. Have a wonderful weekend, and we'll catch you guys next week.
Happy holidays, y'all.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh